stocks falling after hotter than expected inflation data. January's consumer price index coming in above estimates. Joining me now, we've got Adam Coons, who is the Winthrop Capital Chief Investment Officer. Adam, good to have you back on the program. So how should investors be navigating this inflation data as it pertains to their portfolio?
Yeah, I mean, I wouldn't get too worked up about one data point. I think investors should continue to think that inflation coming down, the deceleration of inflation with that, is that it's going to happen slowly. They're going to have sticking points. And I think trying to, pretend to have a crystal ball and guess what the Federal Reserve is going to do is really just not a viable strategy. I think you need to kind of, hold to your overall long-term strategy. And inflation is going to continue to come down. Trying to guess the rate of which it's going to happen, I think is not, like I said, an investment strategy that individuals should be trying to do. So just take this with a grain of salt and just kind of continue to see how the economy shapes up here in the next several months.
And so as we continue to think about what this more broadly spells out about the economy, and with the reminder, to your point, which you mentioned a moment ago, one data point does not a trend make. However, when we think about consumer spending and what we're able to kind of extrapolate from this report and what's being prioritized versus what's being pulled back on, I wonder what you make of some of the specific indexes where we got an update on the read through the mindset of the consumer through this report.
Yeah, I mean, I think rents are obviously something that we're paying a lot of attention to. That is something that is slow moving, but the housing market is really what that comes down to, right? And the strength of the housing market continues to be there, and that's propping up rents. So that's a key area for us. I think when you look at a lot of the other goods, it does show that the consumer continues to be stronger than what a lot of people have expected for well over a year now, when kind of economists have expected the consumer to be that crack. And you're not seeing that in the individual sectors within this inflation CPI print. So to your point, the consumer is really what's propping this up, whether it's because they're continuing to pay more for rents or for smaller tactile goods or the like. So I think until something really changes, it is going to be a slow moving deceleration of inflation. But let's not forget that this is really highlighting the fact that it is a good thing that the consumer is able to spend this way, because that means that jobs are still strong enough to support American lifestyle. So it's difficult when we get into this dynamic where in some ways potential good news is bad news for stocks. And that really comes down to expectations. But as a whole, my read of this is that the U.S. economy is still strong.
I want to try and squeeze in two more questions here, Adam. Number one, if we did see any type of broader pullback in consumer spending, where are the areas of the market that would feel that first?
Well, I think, autos is something that would be a big piece of the U.S. economy, and that's obviously a piece of the economy that this administration has focused on trying to keep here in the U.S. and growing it here in the U.S. So I think that would be counterintuitive if we saw consumer spending and a deceleration of the spend on autos. I think that would be a difficult a hurdle to get over in a lot of different departments. So that's really a key for us. And then I think it just comes down to, like I said, the food and oil and gas. Those things are just going to kind of come in waves. So we're not really paying a lot of attention to that. It's really, what are they doing with housing? What are they doing with autos? Those are the big components that are really going to drive inflation in the economy.
And while we have you here, there are some specific picks that you're looking across in this environment right now, and you're focusing in on cybersecurity. Why is that?
Well, I mean, look, the AI narrative story has gotten overplayed. I think we'll all accept that. But there's some viability within that. So we're looking for pockets to play in artificial intelligence without getting into the FOMO trade. And one area where we believe that's the case is cybersecurity. Regardless of the direction of AI, whether the spin comes from some next generation or a GPU. Those are very difficult things to forecast. But what we do know is no matter the direction, the need for cybersecurity is going to increase, and the need for more advanced cybersecurity is going to increase. So that's why we like that theme here in 2025. So Fortinet and CrowdStrike are our top picks. Valuations are a little bit rich, so we're position sized, appropriate with that, and we like the basket play of playing the two top names that I just mentioned. But like I said, that's a pie that we know is going to grow and has a little bit more forecastability, unlike some of the different components within AI.
Adam, thanks so much for taking the time here with us today. Really appreciate it.
Yeah, thank you.